Hello, good evening and welcome to Business here on Joy News Prime. I am Beverly Broom, Senior Finance Lecturer at the University of Cape Coast. Seram Kawo is blaming Ghana's debt distress position on the reckless spending by government. According to the African Development Bank's 2023 West Africa Economic Outlook report, Ghana's external debt relative to the size of the economy of about 39.5% in 2022 is ranked as the 6th highest in West Africa. Speaking earlier on the marketplace, Mr. Kawo attributed the current state of Ghana's GDP to lack of accountability by government.
That there is a lot of work for us to do as a country. We have touted ourselves as the gateway to Africa and one of the countries with good policies and implementations. But being 6th in Africa in terms of debt to GDP ratio and having the average of more than 29.5% of that of West Africa tells us that there is a lot of work for our political leaders to do in terms of raising revenue, the use of our natural resources to the benefit of Ghanaians. If we have Niger that have a coup and their debt to GDP is better than that of us, Ghana, it's a sad story that our leaders need to sit down. We need to re-strategize and ensure that the resources that we have at our disposal and any amount of money that we try to borrow, we use it to the benefit of the Ghanaian population. Government has no duty to make excuses for us or for them plunging us into debt distress. We have not enhanced our corporate governance systems. There's no transparency and accountability that will ensure that monies that are borrowed are properly used efficiently and effectively in our country. And so we also do not mobilize enough domestic revenue in order to augment the borrowings that we have done. We fail to promote our tourism sector. Now we are now talking about it. A lot of the monies have been spent recklessly, excuse my language. They have spent the monies recklessly without accounting for it. There is no value for the money. Government contracts in Ghana are overpriced. And once they are overpriced, we realize that the money that we borrow, we have to go back and pay for them. We go in for dollar-denominated loans. So when the currency depreciates, our currency will the loans or the debts that we have will also have to go up. It is high time, if these countries are doing it and they are not facing crisis, Ghana as a country must also look at that. And once we are not doing it, we have no justification whatsoever we want to talk about.
Banking consultant Dr. Richmond Etuahene has joined calls for the operationalization of the Financial Stability Fund. Commercial banks are making a strong case for the operationalization of the much talked about fund to sustain their operations. Dr. Etuahene emphasized that the fund needs to be operationalized before the end of the year to help the banks shore up their positions for international businesses.
Most of them are operating on negative capital. And the difficulty in negative capital is that your correspondent bank in overseas, where you do international trade, they look at you before they can even give you a credit line, before they can even tell you that establish your LC through us to go to your suppliers. Unfortunately, in the insolvency or the capital negative of the banks are not helping them to be able to do the international trade aspect of the business. And it's very, very critical that we take a second look at it and let us operationalize it quick before we get to maybe the end of the year. Because before the end of the year, then the auditors are going to do the calculations again and then it will possibly go down. So that is the reason why I believe they need to operationalize it. If whatever amount they have got, I'm told they have 500 and the World Bank in September is giving us 250. Immediately we should operationalize this and locate it to the allocate it to the especially the domestic or the indigenous banks, those who have no access to the market. When I say market, those who can raise money on the stock exchange, they have started already. GCB recently said it was raising 1 billion, and I believe it is okay for them. But what about these banks like the CBGs, the Prudentials, the Fidelities, and the BSIC Omni? I mean, they need this money to be able to show their position as far as international businesses are concerned, and it's so important.
Now, government has given the strongest indication it may consider an increase in the BOST margin on petroleum products following the impressive performance of the bulk oil storage and transportation company BOST. BOST posted a profit after tax of 342 million cedis in 2022 compared to the net profit after tax of 161 million cedis recorded in 2021. Speaking at the company's annual general meeting, Minister of Energy Dr. Matthew Opoku Prempeh stated that the upward review of the BOST margin in 2022 from 7 to 9 pesos per litre led to improved operational efficiency and has set the company on a trajectory for growth. Hence, an increase of the margin will be appropriate. Here's more in this report.
The man of BOST, Eko Hackman, stated that the impressive financial performance of the company is as a result of improved financing arrangements, more effective customer engagement and retention initiatives, as well as the prudent management of trading risks.
BOST operating income also increased by 69% from 254 million in 2021 to 428 million in 2022. This was on the back of a 77% increase in revenue from 1.12 billion Ghana cedis in 2021 to 3.1 billion Ghana cedis in 2022.
Speaking at the company's annual general meeting, Minister of Energy Dr. Matthew Opoku Prempeh said the upward revision of the BOST margin from 7 to 9 pesos per litre in 2022 has helped improve operational efficiency, leading the company on a trajectory for growth. To this end, the minister stated that he will advocate for an increase in the BOST margin.
In 2022, we increased the BOST margin from 7 pesos to 9 pesos, and I will advocate for it to go even higher. The benefits of BOST intervention should not be lost on us. That money given to BOST and given and targeted will be pitched back to very good use. We did facilitated a lot and commissioned a lot of major works out of this BOST margin. We commissioned and operationalized the Temakosomo petroleum product, I think is a pipeline. Completion of the Kumasi rehabilitation projects. Repair and commission of the 3 remaining tanks, construction of the BRV park at Accra Plains Depot, completion of the Tema to Kumasi pipeline feed. These transformations have led to improved operational efficiency and have set the company on a trajectory for growth.
Meanwhile, revenue from oil product sales saw an increase of 387% in 2021 compared to 2022.
Meanwhile, Executive Director of the Institute for Energy Security, IES, Nana Mwesi VII, has shut down moves to increase the BOST margin from its current 9 pesos per litre, arguing the timing is not right.
Well, if you don't increase the BOST margin just for the sheer, should I put a fun of increasing it, it must be tied to something, a project. And I've indicated already that you also must consider the timing that you want to do such an increase. For me, in future, I want to consider at a good time to place a levy for purpose of securing strategic fuel stock. Yes, of course, we can consider that. And we all know the purpose of strategic fuel stock. And if it can be handled well, then of course such a stock will inure the benefit of consumers. And so the intent of the increase in margin must be clear, and also the timing must be looked at.
Now, the bulk oil storage and transportation company BOST has reiterated the relevance of the Gold for Oil program in the wake of the increasing prices of petroleum products at the pumps, insisting it has rather controlled the rate of increase. According to BOST, the recent price increase of petrol and diesel cannot be used as a measure to question the impact of the program on prices at the pumps. Managing Director of BOST, Edwin Provençal, argues the price increases of petroleum products is as a result of developments on the international market and not the Gold for Oil program.
The Gold for Oil policy was a temporal measure that was put in place to deal with the inflationary pressures that befell on us from last year. The price build-up has two key components. One is the world market price, and the other one is the forex. The Gold for Oil, as you can all see, has addressed the forex issue. But if the world market price keeps going up, there's not much Gold for Oil can do about that. So I think that if you look at the world market prices today, it was almost the same as what it was in November last year when petroleum prices was at 23 cedis. But as you can see, petroleum prices are still at almost 13 cedis. And that shows you that the Gold for Oil policy has really suppressed the inflationary pressures that would have arisen as compared to November this time. So the Gold for Oil policy is very relevant, it's still working, but know that it's a temporary measure to deal with this particular issue that Ghana in particular faces.
Well, let's hear again from the Executive Director of the Institute for Energy Security, Nana Muisi VII, who says the Gold for Oil program has not addressed the problem in the sector.
First time I'm hearing that government Gold for Oil program was a temporary measure. Quite surprising to hear this because it is the same entity and the Ministry of Energy, MPA, who gave us all the hopes and projections that within the first 6 months of the Gold for Oil program, BOST intervention in the market or the market share of product supply will set up to about 50%. And that is to say that they want to take control of the fuel supply market. But today, we're getting the indication that it's a temporary measure. Yes, probably they are seeing the shortcomings within the framework because today, BOST is not contributing more than 15% to the market. And as a matter of fact, its importation of products on account of Gold for Oil is falling every passing day, and we'll put out the data to show clearly that Gold for Oil program has not been able to address the problems we have today. In March 2023, when the BOST head office was opened, the minister, the vice president was present, and was clear to every Ghanaian that the price of 13 cedis per liter that we were seeing is as a result of the Gold for Oil program, and that price was going to fall further. Today, we've gone past the 13 cedis mark for a liter, and by next week, we are sure to see price go up.
Let's still stay on the extractive sector as stakeholders in the upstream oil and gas sector are making a strong case for the Ghana National Petroleum Corporation, GNPC, to remain relevant and efficient in the midst of energy transition across the globe. This call is critical as a survey by the Natural Resources Governance Institute indicates that many oil companies are reducing investments in crude oil production. Speaking at the stakeholders' engagement on the survey, Senior Africa Programs Officer of the NRGI, Dennis Jairi, said time has come for the GNPC to leverage its capacity to explore other opportunities in the West African region to stay relevant.
The survey involved 15 national oil companies in North Africa and Latin America. It examined the strategies adopted by the NOCs in responding to the energy transition, considering the varying sizes and orientations of these companies. The survey found that there are some level of investment going into energy transition and highlighted the need for local players to position themselves properly to benefit. Senior Africa Program Officer of the NRGI, Dennis Jeyo, told Joy Business that Ghana's National Petroleum Corporation can explore other avenues to stay profitable.
But what we are trying to say is that each NOC has to look at a range of possibilities that it can pursue. So NOCs such as GMPC must look at the potential that they have in the country. Do you have a potential? So for instance, considering that Dangote refinery is already set up and is about to kick off, do you have that equal capacity to compete in the region? If you do not, which gaps are you seeing? Which niches are you looking at taking advantage of? So for instance, we cited the issue of lithium. We have just discovered lithium. What can you do with lithium as a national oil company, given that lithium is very useful in the transition process? Do you have to go into refineries like Dangote is doing, given that you have different capacities and you may not be able to compete? So it is all about encouraging companies to take advantage of their local opportunities and reduce the risks that they will bear on the energy transition, both locally and regionally.
Speaking on the energy transition concerns, Director for the NRGI, Nafi Chinre, said Africa is not doing much to avoid the impact of the new global trend.
It is important to say that while some people may say that energy transition is a Western agenda, it is real. It also may be a Western agenda, but the point is that countries like Ghana or Africa have done very little to shape the narrative around energy transition. And so we have to develop strategies around how we respond to narratives that are going to impact on our own development, on our own economies and our own development. The whole question around energy security is real.
It also emerged from the survey that the GNPC has seen a marginal decline in expenditure on crude production. Eben Sabute's report for Joy Business.
Now, LPG Marketers Association is warning that prices could go up again by the end of this month. It's coming after the product witnessed one of the biggest jumps compared to diesel and petrol during this first pricing window. According to the LPG Marketers, the projection is based on current development on the world market. Gabriel Kumi is the Vice President of the Liquefied Petroleum Gas Marketers Association.
LPG saw the highest increase, but LPG price has gone up between 15 and 20% this winter, compared to diesel and petrol, which went up by about 7-8%. The main reason attributed to this is the fact that the price of finished product on the international market of LPG had gone up by about 30%. And unfortunately, crude oil also saw a marginal increase in the price of crude oil over the past 2 weeks. The city was able to gain some grounds over the past 2 weeks, but unfortunately, the grounds that the city gained was not enough to offset the increase in the price that we are witnessing in the international market. That is why LPG has gone up that much.
What is the outlook after 2 weeks? What do you anticipate the market will look like?
Is already the price of finished product in the national market of LPG has already shot up by some 5%, which means that barring any positive outlook, the next window, which begins at the end of this month, on the 1st of September, we are likely to see another increment in the price of LPG, and that is quite bad for consumers.
Now, managers of some hardware and general merchandise shops have been arrested at Waja in the Greater Accra region for non-compliance of value-added tax regulations and infractions. The arrest was made by the Ghana Police and the Ghana Revenue Authority. Modern Floor and EF's Cosmetics were among some of the shops that were closed. The move is to ensure that businesses adhere to tax laws.
The facilities, namely Modern Floors Hardware, Kingston Company Limited, Cup of Joy Ventures, and Eve's Wholesale Price, situated in the Waja Kaswa Enclave. The managers of these companies were arrested on various infractions and non-compliance offences contrary to the Value Added Tax Act. Some of the offences include non-issuance and selective issuance of the Value Added Tax invoice, The exercise, which is part of efforts by the Ghana Revenue Authority to promote voluntary tax compliance, will also monitor apprehended businesses to ensure compliance. Assistant Commissioner Joseph Annan is the Accra Regional Head of Enforcement at the GRA.
They are all not doing the right thing per the VAT Act. So they've been arrested and they are going to the CID will take their statements. And then we also do a preemptive assessment. We will demand that they pay immediately and then we'll refer them to our audit units for full audit to be conducted. Those that we have done in the past, we are going to visit every single one of them because the import of this exercise is to promote voluntary compliance. So we are going to visit every single taxpayer we have visited in the past, starting from 2022, right? September through to date, to know whether they are complying. And I pray that when we get to them, we expect them to do the right thing.
He further asserted that the authority will begin clamping down on businesses which have defaulted in the payment of declared taxes.
Now we are also going to go into our system to know whether when you declare, you pay. Because it's not just about test purchase. Test purchases will ensure that you issue the invoice when purchases are made. Then the next stage is for you to declare. Then when you have declared, we expect you to make payment. So we are going to go into our system and then fish out all those who are declaring and not paying, and even those who are not declaring. And then the appropriate action will be taken against them.
Evelyn Mensah, the owner of Eve's Wholesale Price, cautioned businesses to ensure tax compliance.
No, I didn't know. They only come to me to take the money, or sometimes we pay through the online, but nobody told me about any taxing. But yes, I am from here. I am good. Well, I think that everybody, because now I think that everybody should go and issue. I mean, I don't know about it. If I know, I would have, but it's fine. It's fine. Do you understand? Everybody from now, I know that yes, there should be a tax even on ice water or whatever it is. So yes, I am going to the office and they will take me through, and then I'll learn from there.
The Ghana Revenue Authority will continue to conduct random checks to ensure voluntary compliance of value-added tax.
And that's how we wrap up business tonight. For more business news, you can log on to myjoyonline.com/business. I am Beverly Broom. Razak.